$10 in my wallet. I can't afford anything right now. If I only knew a way to make this grow. Did you say $10? Let me help you to switch that up. I will show you how to grow this into something way bigger. Hello beautiful people, welcome back to my channel. If you're new here, my name is Laura. I'm a finance coach and entrepreneur based in Bali, and on this channel we discover tools and strategies that help us to level up and live happier and richer lives. Quick side note here, this video is for entertainment purposes only and is not individual financial advice. Today we're talking about how saving $10 daily can help you get back on track and start saving on a more consistent basis. If you have $10 worth of change casually sitting in your pocket, this might sound silly, but $10 can make a significant change in your life, especially when used in the right way. What can $10 buy you? Maybe a lunch in a fast food restaurant, a coffee at Starbucks, or maybe a face mask. But do you know what it can also be? $10 can be a stepping stone towards financial freedom. Saving $10 daily means you will have $70 in a week, $300 in a month, and $3,650 saved up in a year. Now I know this might not sound like a big amount of money, but bear with me and stay tuned because I will help you find out how you can maximize these $10 and get the most out of them. But before we jump into it, don't forget to hit the subscribe button. I have tons of amazing content planned for you and I upload new videos every Tuesday and Saturday. And since you're pressing buttons already anyway, also press the like button. Now, let's clarify a few basics. You can either save money or you can invest money. These things might sound very similar to you, but these things are two completely different things. Saving is usually done through just leaving your money in your bank account or putting it into a savings account, while investing can be done in multiple kind of ways. You can either buy some stocks, you can invest in bonds, you can invest in funds, or even cryptocurrencies, handbags, art. There is a multitude of ways that you can invest your money. If you want to grow your money, you have to invest. There's no way around it. You cannot save yourself rich. Actually, you're losing money every year because of inflation when it sits in your bank account. 2021, the US had a whopping 6% of inflation. This is insane. So if you had $10,000 sitting in your bank account, you actually lost $600. But with investing, there's always a certain amount of risk involved. That's why today we will discuss how you can invest these $10 every day with 3 different levels of risk. The levels of risk are classified into low, moderate, and high. The amount of returns you're gonna get for your investment is pretty much tied to the level of risk you're willing to take. So with high risk levels come high returns, and with low risk levels come a bit lower returns. But obviously, if you have a high risk level, the probability that you might lose your money is also there. So before you start investing into anything, you need to figure out your personal risk tolerance. But let's get into the options. We'll start with the one with the lowest amount of risk. This would be index funds or ETF, exchange traded funds. These funds mimic a market index, that's why they are very low cost and also very low risk. So let's say stocks are flowers. These funds would be like a big flower bouquet with different kinds of flowers in them. So you have a little mix of everything. There's, for example, an index that mimics the 500 best companies of the US. And when one of these companies doesn't perform so well, all the other companies that perform well will equal it out and you don't have like big drops. Obviously, this also is moving since it mimics the market. So when the market is down, this index will be going down as well. And when the market goes up, this index will be going up as well. So if your personal risk tolerance is fairly low, this is a great option to invest for you. All you have to do is to put in your money, invest into a fund, and year by year it will grow bigger and bigger. With this method, you might not make tons of money within a month, maybe not even within a year, but it will grow year by year and the earnings will be higher and higher. And this is due to compound interest. Compound interest is the interest that you earn on your interest. I know this might sound a bit boring and complicated, but bear with me for a second. It's not as complicated as you think, and this effect may actually change your life. Let's illustrate it by using very simple math. If you have $100 and these $100 earn you 5% interest in a year, after 1 year you will have $105. But after the second year, you will not have only $110, you will have $110.25 because you gain the 5% on the $105. Well, this might not sound much because it's just 25 cents. What are 25 cents, right? But the more money you put in and the longer it stays there, the longer it is able to work for you, and this will be a very exponential curve. Let's get into some more concrete calculations so I can show you the magic of compound interest. So let's say you saved $300 already because you saved $10 every day for a month. Then you have an initial investment of $300. Then you will put in $300 every month for the next 10 years. Then we will say you get an 8% of yearly return on your investment and it will compound annually. So let's calculate this. So after 10 years, you will have $52,799.30. But you only contributed $36,300. So you got quite a decent amount of interest. Let's switch this up and actually go for 20 years. What happens if you invest this for the next 20 years? You will end up with $166,141.36. And as you can see, the growth is quite exponential. Here in the first years, it's not that significant. You can see it with year 10. What we saw, it was about, $15,000 interest. But now it starts to get interesting. I mean, look at this curve. You made almost over double than what you paid into it only by interest, by compound interest. And let's go even further now and calculate this for the next 30 years. You will end up with over $410,000. This is insane. I mean, look at this curve. You made over $300,000 in interest. That's why it is so important to invest and invest early. The earlier you can invest, the longer compound interest can work for you and do its magic. Let's get to the second option, the moderate risk investment. This would be stocks. Stocks are a bit more risky than funds, but they are still a very trusted way to earn and make your money work for you. Investing in stocks, though, requires a lot more of your time because you really have to study the companies you invest in. What is their business model? What are the numbers? And what is going on in the world? What are the news in the industry? How could this impact the company and the company's success, and also like the price and the stock? So this is something you have to put a lot more effort into. One simple principle as that beginners are being taught is to buy low and sell high. Well, surprise, surprise, it's not that easy. You can't beat the market. You are competing against the highest educated brokers, people working on Wall Street, And it will be very hard for you as an amateur investor to compete with that. But the good news is you don't have to beat the market. There's the saying that time in the market beats timing the market. So you don't really have to worry about buying low, selling high. You just have to move with the market. So obviously the best time to buy a stock would have been 20 years ago, but the second best time is now. Let's say you invested into Microsoft 5 years ago. What would that look like? Well, let's see. If we look at the chart, you would have made 370% on that investment. This is huge. So you would have bought a stock for $64 and now it would be worth $300. This would have been quite a good investment. But obviously it's not that easy to pick the right stocks. It's definitely a lot riskier than investing into index funds or ETFs, because if you invest in the wrong stocks, you could also lose all of your money. Let's get to option number 3, the high risk investment. Now, if you're up for a challenge and in for crazy amounts of gains, then crypto might be for you. Let me give you a fair warning though. Cryptocurrencies are susceptible to great loss as much as they are open to make high amounts of earnings. Cryptocurrencies are so volatile that people became millionaires literally overnight. Now imagine putting a little bit of money into some kind of cryptocurrency, waking up the next day as a millionaire. This is crazy. But obviously you could have also lost all of it. Cryptocurrency trends are really hard to predict, and it requires a lot of research to get into it. You also have to watch your portfolio kind of like a hawk to make sure your assets are safe. There are different ways to earn from cryptocurrencies. You can either invest long term and just hold on to them, you can trade, or you can stake your cryptocurrencies. Investing and holding on to your cryptocurrencies is very similar to investing and holding on to your stocks. You just buy them and wait for the market to go up, and once you feel it's the right time to sell, you can do that. Trading is a lot more complicated because it requires a lot more of analytical and technical skills to actually read the charts and analyze the charts and trends. You don't really want to do that if you are impatient and a little bit anxious with losing money, because I don't think you'll be able to sleep at night. And with staking your cryptocurrencies, you basically just leave them in the exchange and you will earn interest on your cryptocurrencies. With all of the 3 options I just mentioned, it's important to trust the process. Set a strategy for yourself, know what you're doing, invest only in what you understand, and once you have everything in place, trust the process. Do not panic when prices drop. This happens, this is normal, the markets go down, but they always go up again. And if you have a strategy in place, you don't need to worry. The great thing is that you can start with any of these 3 strategies by simply saving $10 each and every day. No matter however you decide to make your money work for you, there are 2 important things to take note of. The first is discipline. Discipline is very important when it comes to saving and investing. If you are a person that doesn't have discipline, especially when it comes to spending and saving money, you will easily be overwhelmed and end up spending all of your savings. We don't want that to happen, right? That would be such a bummer. That's why you need to have a strong why. Think about why you want this. Why is it important to you? If you have a strong why, you can always come back to it when you're tempted to spend your savings. It will give you a compelling reason to stick to your goals and make it happen. The second one is delayed gratification. You need to constantly remind yourself that whatever it is you're doing right now is something that your future self will thank you for. You might not be living your best life in every area of your life right now, but this is because you're prioritizing your future, you're doing something for your future self, for your dream life, and this will go a long way. It's the same with exercising and dieting. If you're eating something healthy today and not binging on chocolate all day, you're doing it for your future self so you feel better tomorrow. Now tell me, which of the 3 strategies I mentioned in this video are suitable for you? Let me know in the comment section down below. If you liked this video, make sure to hit the subscribe button because I upload new videos every Tuesday and Sunday, and I have tons of amazing content planned for you. And also hit the like button if you like this video. Just gotta casually drop that here. Alright friends, see you in the next video. Can't wait. Bye!